Hello, today is October 22, 2015. We got another trade review from Ichimoku Trade, worldwide leaders in the Ichimoku indicator. This is Manesh Patel, and we're going to go through a trade review on a particular stock. In fact, we're going to talk about McDonald's, how we basically took a pre-earnings trade for McDonald's. Okay, before we begin, let's go for a normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell a particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, so we support everything from Thinkorswim, TradeStation, eSignal, and so forth. Here are our contact details here. We could call us or email us for any information here. Now, one of the things that we do in our options university program is one of the strategies is pre-earnings based on Ichimoku. So what we specifically do is look at Ichimoku charts, and at that point we predict with high probability which way a particular instrument may go on earnings. So this is one example here where you have, let me change this little mouse cursor here to a pointer. This is McDonald's here. You can see on the daily time frame here, and you can see here exactly what happened here when it came down. It's kind of hovering around this little consolidation pattern support right here, and you could see it was hovering around here, and you could see that it was above the cloud and above the green line on the daily. On the weekly, let me change the time to the weekly time frame. Give me one sec. Here's a weekly time frame here. You could see that McDonald's was basically in a big wide consolidation pattern for a while, and they had a high, it was at the top here, but based on Ichimoku charts, what we saw in the lower time frames, it had a high probability of breaking out, which is exactly what we're looking for. Okay, so now let's go to the trade and let's look at the option trade that we did. Okay, so here's a risk graph for McDonald's here. Let me go to here. This shows you two contracts here. Let's go to view trades, and you could see basically we bought it October 20th at 10:30 a.m. Eastern Standard Time. We bought them for 50 cents contract, two of them, and you could see right now they're basically mark price is about $1.60. So if you look at it here, we're getting very close to a 3-to-1 reward risk ratio on this particular trade. So we're at over 200% profit, and we're closing in very close to getting into 300%. And the thing is, if you look at this, this is January options at 115, so we still got a lot of time for this to basically keep on moving forward. A couple of things you can do on money management side: you could close out one of these positions here, and the second one now is basically free to a point you could let that thing ride. Reason why is when you close out one, that pays for the second one, and you still walk away with $1 profit. So if you do that, you're basically walking away with $1 profit here, and the other one becomes free, and the second one you could pretty much let ride for a while based on technical analysis. So this gives you a great insight of basically some things that we teach in our options university, where we show you with Ichimoku how to predict before earnings what's going on with a particular instrument and which way to trade it.